Do you know the top 5 mistakes that we see business owners make every year that lead to big workers' compensation audits? Well, stick around to the end because I'm also going to do a bonus mistake that people make that actually costs them physical dollars doing an accounting thing. Hi, this is Jerry Nicolo at Real Insurance Talk with Huff Insurance. We're going to talk about workers' compensation and audits today. And there are mistakes that businesses make every year that end up costing them big money come audit time. All right, jump right into it. Think that an employee is clerical? The insurance company might disagree. So one of the biggest mistakes we see is employee misclassification, where somebody classifies an employee as clerical when in fact they may be clerical some of the time, they're not clerical all the time. For example, an employer who spends most of their day in the field may be classified differently than someone who works exclusively in the office. And during an audit, the insurance company is going to review what employees actually do for their jobs so they can be classified right. If payroll gets moved into the higher rated classification, it can result in significant additional premium. For example, if you got somebody who's clerical in the shop, say you got a body shop, they're at the front desk, they're clerical, they're in the office, but if they leave that office and step foot into the garage or the shop floor, they no longer considered clerical. Or if you got a construction company and the person's behind the desk at the office most of the day, but occasionally they go out to the job sites, no longer clerical, and all the payroll needs to be moved into the higher rated of the classifications. So moving on, that subcontractor you paid $100,000 to last year could become part of your payroll. So another mistake we see is missing certificates of insurance for subcontractors. Many business owners just assume because you pay somebody with a 1099 or their own subcontractor that they're automatically excluded from workers' compensation coverage. That's not always the case. If a subcontractor does not carry their own workers' compensation insurance and you can't provide a certificate of insurance to your insurance company, the auditor may and probably will include those payments to that subcontractor on your payroll, and therefore you'll be paying workers' comp for them. So because if they get hurt, they're going to wind up paying if they don't have their own workers' comp. So therefore, they're going to pick up that payroll audit if they don't have their own insurance and don't prove it to them. So this is one of the most expensive audit surprises we see happen every year, especially for contractors. If you can't prove it, moving on, if you can't prove it, the auditor can't assume it. Poor record keeping. That's another major issue when it comes to workers' compensation audit. Auditors rely on documentation, things like payroll reports, tax records, overtime records, job descriptions, certificates of insurance. It all matters. When records are incomplete or missing, auditors have to make the decision based on the information that they have available. So good record keeping throughout the year can make an audit process much smoother and avoid unnecessary charges. Moving on now, your business changed, your insurance didn't. Not reporting changes in operations. This could just simply be you hired 3 or 4 more people because you're growing. Let your insurance company know so that payroll is added on mid-year and not just all at the audit time, because it's going to get picked up whether you tell them now or wait till your renewal. So your business evolves over time. Maybe you even added a new service or expanded into a new area. You hire different types of employees and therefore classify differently than your current types of employees. If those changes just aren't simply communicated to the insurance company or insurance agent during the policy term, they only get picked up at audit, and that could be a big, big audit. That's when business discover their operations should have been classified differently all year long. So stay in communication with your insurance agent. We like to stay in communication with our clients throughout the year to make sure everything is up to date. Moving on now, just because they're family doesn't mean the auditor ignores them. You got it. Many business owners assume their spouse or other family members won't affect their workers' compensation insurance. The rules vary depending on your state and business structure. Owners, officers, and family members may need to be reported differently than many other people, but they still need to be reported. The other area of mistakes can lead to audit adjustments is not reporting them. Just because it's your kid working for you, they need to be reported on their workers' compensation audit. We had that happen here. Our kids are in the business. They're on the payroll. They get reported to workers' compensation. So bonus mistake number 6 is what we're going to do, right? You may be paying workers' comp premium on payroll that you don't have to. There's a mistake that could be working in your favor. It's called overtime. Most states, I think all but 4, exclude overtime payments from your workers' compensation calculations. So many business owners don't realize that this is the case. For example, an employee earns time and a half, and the extra half time premium may not be included in workers' comp, or double time. That double time may not have to be included, just the base. The problem is that you need the proper payroll records throughout the year to separate your overtime wages from your regular wages, in order to make sure that this auditor can see which ones are overtime and which ones are actually not overtime. Or so it's all but 4 states, and I believe the 4 states are Pennsylvania, Utah, Delaware, and Nevada, which they always have to include all payroll, whether it's overtime or not, into the things. But the rest of the states, you might want to check with your state. And if you're reporting your overtime wages as part of your normal workers' compensation audit, you may want to check with your payroll records and have that auditor take another peek at it. So those are the biggest mistakes that we see every year that lead to big audits. So in closing, when workers' compensation audits don't have to be scary, but they can get expensive if these issues aren't addressed throughout the year. The best way to avoid surprises is to keep good records, communicate changes with your insurance agent, and make sure your workers' comp policy accurately reflects your business, how your business actually operates. This is Real Insurance Talk with Huff Insurance. My name is Jerry Niccolo. If you have any questions about insurance, whether it be business insurance, personal insurance, life insurance, probably not health insurance, we stay clear of that, please give us a shout, unless it's group health insurance. Please give us a shout. Jerry Niccolo, Real Insurance Talk with Huff Insurance. Be happy to try to answer any questions you may have. And please reach out and let us know. Thank you.